Hello, Washington Small Business Fair. Welcome to Small Business Lending, how to best work with your bank. My name is Scott Bossom. I'm the SBA manager at Columbia Bank, and I'll be talking with you this afternoon on this topic. So let's jump right in. Little agenda, we're gonna little introduction, talk about what does small business lending really mean? Where do I look for money? How do I start? What do I need to have ready? And what if I am still told no? So just briefly, a little introduction about myself and what the session is going to really get into. We're not going to get into so much the SBA programs in general. Janie Sacco from the SBA Seattle office has a session that we're also sponsoring that's going to get into more of the details on the specific lending programs that SBA has. This session is more tips and guidance on how you can better work with your bank in navigating what can be a really, really daunting task for many small businesses, finding access to capital. A little bit about me. As I mentioned, I'm the SBA manager at Columbia Bank. I've been with the bank for about 5 years. Prior to that, I actually worked for the SBA in the Portland district office. I was what was called a lender relations specialist. I did a lot of work with banks and with lenders and helping train them and answer questions and whatnot. But the other part of my job was helping businesses that were looking for money, not finding it, being frustrated. I used to joke that I'm not a psychologist, but I play one at the SBA. And I still do at times today. I would get people on the phone. You could just hear the stress in their voice. They're not finding the money they need. They've been turned down over and over. And I really try to eliminate the noise. I'm a math nerd. I love story problems. And, every small business to me is its own little story problem. And as you know, with story problems in general, not all the info that's in that paragraph is needed to solve the problem. And really, small business access to capital kind of has that same dynamic. So I really try to eliminate the noise and get to the root of what is the need, what is the best next step, and helping that business owner really navigate this access to capital journey. Something I would say often, if you're a business, you're looking for capital and you're not finding it, you're either looking in the wrong spot or you're not ready. And what we will go through today is how to better work with your bank in figuring out what that fit is and what that next step is. So what is small business lending, that term? And it really depends. The reality is that as a term, small business lending means a wide range of things. It's many times differentiated based on the size of the business. You look at small business loans, it could be an SBA loan, it may not be an SBA loan. SBA itself has size standards. So the standards that they look to consider you small. Some of those industries can actually be gross revenue in the $30+ million range. You could have over 1,500 employees in some industries and still be considered small. Loan ranges in the SBA world, they go from $5,000 to $5 million. So it's a significant range that businesses, what you're looking at when you're talking about small business lending in general. The issue is that when most business owners need a loan, they think about a bank. But then many banks then do a poor job at actually working with the business to determine fit. The instinct to think about a bank, and we're going to talk about this a little bit more in here in a second, that's not incorrect. That's actually an accurate instinct for someone to have. It's just, unfortunately, the banks then kind of drop the ball and do a not so good job at really, again, helping that business navigate what is the best next step? Can we do a loan for you? Can we not? How can we help you out, better? And so this really perpetuates the myth that banks don't like small businesses, that we don't do small loans, that we aren't supportive of small businesses in our community. And that is absolutely 100% a myth. And I'm going to explain how you can get past, those perspectives that you may have about a bank. So where do I look? Well, believe it or not, as I just mentioned, it is still banks. Banks we are who have branches. We are who people see. We're in neighborhoods. We're in communities. Most people, when they think about doing something from a financial standpoint, lending or whatever, whether it's personal or business, many people think about their bank. And so there is one important caveat, though, when you're thinking about going to the bank, and that is get to the SBA department. Whatever, for whatever reason, banks like to hide the door to the SBA group. I don't understand it. I saw it over and over when I was with SBA. And really, most people, when they think about going to the bank, where are they going to go? They're going to go to a branch. Okay. So branch staff are generally newer. They don't know what they don't know. It's not their fault. They're just less experienced in all this small business lending world. And they many times don't understand the nuances of SBA lending or how the bank they work for approaches SBA lending. So they give you kind of the conventional non-SBA answer. Collateral, time and business are two really big ones there. Something I joke about, but it's actually accurate, is that banks don't care about collateral unless you don't have any. And many times, not having collateral, it's not a result of you running the business improperly. It's the type of business, it's the type of deal you're asking for. You want permanent working capital to continue fueling the growth of your company. Well, you're not going to go buy equipment, you're not going to go buy something tangible with that money. So it becomes a real challenge for that bank to get comfortable. Let me see if this rings a bell. I'm sure some of you out there that are listening and viewing this have ran into this or heard a story about this where you go to the bank, you tell them you want to apply for a business loan. They're really excited. They want to take your app. They help you out. You get the app filled out. You turn in the information, and then maybe 2 weeks later, 3 weeks later, whatever, they come back and say, sorry, you know what, we can't do this loan. And you're kind of like, well, wait a minute. And they say, yeah, man, we like everything about it. You've been around, you got cash flow, you're good management. You just don't have enough collateral. And you're sitting there going, well, wait a minute. Of course I don't. I'm a service oriented business, or, I'm just not the type of business that has a lot of assets, has a lot of tangible things behind it. It's not my fault. And so you're kind of sitting there shaking your head going, what in the world? You could have seen I had no collateral 1 hour, into looking at the financials I gave you with my application. And so it's a really frustrating process that you can end up in, where you get this interest and excitement in doing the deal, and then a few weeks later they say, no, we can't do it. And again, time in business is another big one there. 2 years is like this magic number. Until you get there, you're considered a startup, and many banks won't even talk to you. And so this is where the SBA comes in. They create a path that fundamentally changes what a bank can do. It turns a no all day long into a yes all day long, because the guarantee that we get from the SBA, it offsets much of the risk of that collateral deficiency or the shorter time in business, or maybe it's more projection based cash flow oriented. We're going to talk about projections here in a little bit. But any one of those issues, this guarantee that we get from the SBA helps us say, okay, well, we don't have any collateral, but we're going to get a guarantee. We like everything else about this deal. So now we can say yes. Whereas before that, you were hearing no all day long. And the important piece of getting to the SBA department is just that, simply that guarantee, that fundamentally changing that. So I had multiple times when I was in the district office that was multiple people when I was in the district office. They were looking for money. They were reaching out to me. Again, they're stressed out. They're not finding it. They've been turned down. Well, if they were in business, I'd always ask them, how long, who do you bank with? So, and they'd say, yeah, this bank. And I applied, and they turned me down and say, well, did you look at was it an SBA loan that you applied for? And they'd say, I don't know. I filled out an application. It's what they had me fill out. And here I am. And so I'd say, that what you're trying to do and what you applied for, I know that bank does that within the SBA group. So contact this person in their SBA group, talk with them. And you know what? If they still turn you down, then you can come back to me, and we'll talk about some other lenders. I never had anybody come back to me, because once I got them to that SBA department, they were on the right path. And even if that bank wasn't able to do the loan, even with an SBA guarantee, they're still on a better path. And we'll talk about some of that here in a second as well. Okay, so what if my bank does have an SBA department? There's a lot of active SBA lenders out there, but there are some banks, there are some credit unions that don't do SBA loans. And so your best bet there is going to be the SBA district offices. Every state has at least one district office. They can give you guidance on active lenders, and then the SBA contacts for them. A lot of times they have lender lists, or they have loan activity where you can kind of see who the most active lenders are. Just for reference, that's Columbia Bank in Oregon and Washington. And so they're just there to help direct you better. Website, very straightforward, www.sba.gov, and then /WA for Washington and OR for Oregon if you happen to be in Oregon. So there'll be contacts you can reach out to. Try and get to a lender relations specialist if you can. Unfortunately, SBA has moved a bit away from that in the last 5 years. So sometimes the district office may not have an active lender relations specialist, but they will have people. They'll have economic development specialists. They'll have people that can still help you figure out, hey, my bank doesn't do SBA lending. Who could I reach out to in place of that? Okay, so let's talk a little bit about how do I start. So in most cases, general conversation with the bank's SBA department to determine their interest that can and should be had. This is really called a pre-flight. It really depends on the size of the deal. The larger the request, the more detailed pre-flight you're going to have. If it's a couple $100,000, the pre-flight may just be a general conversation with their loan officer on some of the specifics around the request in the business. But generally, the lender is going to look at a high-level info. They'll probably want some financial info, if it's an existing business or if it's a newer business, your business plan and whatnot. And so they're going to look at, really general things like whether or not you're a startup, whether you've been in business, how much do you need, what industry you're in, all of those kinds of things. And again, larger requests going to be a little more involved pre-flight than something smaller. But this is a conversation that you should be having with that bank that you're talking to, and that they're going to want to have as well. They don't want to make you fill out an application and provide a bunch of stuff if it's not something they think is going to fit for them initially. And so if there is that fit, they'll proceed with a full application. They'll get you a checklist of information, other information they need to complete that application. You might fill out a couple other forms and things like that along with that, but they'll proceed and then move from there with underwriting and see what they can do. The beauty, though, of this idea that you need to get to the SBA department actually comes into play more if there's not a fit. And normally, and trust me, I guarantee you a lot of you out there have experienced this as well. You go to the bank, you talk to somebody in the branch, they give you the conventional answer, no, we can't do that. And, a lot of times they say, well, maybe you should go talk to Lisa, my friend at this other bank down the street. And so you go talk to Lisa, and, she's excited initially first, and then, but a couple weeks later, same thing. They tell you no. And then Lisa says, I got a friend, John, at a much smaller community bank. Maybe they would do this deal. So they send you over to John, and John ultimately tells you no. And so, you hear this, people going to 3, 4, 5 plus banks and just being told no. The reality is they never should be talking to a bank. This is that, if you're looking for capital, not finding it, you're either looking in this wrong spot or not ready. Many times it's looking in the wrong spot. You're talking to a bank when that is a deal a bank would never do, even with an SBA guarantee. But when you get to the SBA department, these lenders, those people in that group are going to be more in tune with the non-bank lenders that are out there. SBA is dominated by bank lenders. However, they are okay, sorry about that little hiccup at the house, joys of working remotely nowadays. So those people in the SBA department are going to be more in tune, again, with who the non-bank lenders are. There's a really strong community of non-bank lenders that are able to do some really unique things. And it's about fit. There's just situations that a federally regulated bank like we are and like other banks are that we can't do even with the guarantee. But there are these paths, and this is where people in the SBA department are going to know what those alternative paths are in more cases. And so they'll help you in situations where if for whatever reason they can't do the loan, even with the SBA guarantee, they'll make those connections for you. So again, it gets to that looking in the wrong spot dynamic as well. And that's where in a branch, you get the conventional answer. Sorry, we can't help you. You go back out the front door. You make sure you're with the SBA department. You're going to get some better information there. And you also have people in the SBA groups that are involved in these organizations. I personally chair the loan committee of a micro lender here in Portland, and am involved with several others in the Pacific Northwest. And so it's a really warm handoff that we're making as well to these alternative lenders. It's not like, well, here's somebody, maybe go try them. It's an actual person. They're going to know us, know the bank well, and they'll take really good care of you. Okay, so what do you need to have ready as you're looking at talking with any particular lender, bank, or even one of the non-bank lenders? Because regardless of the type of lender, they're all going to still be looking at the same information, essentially. They're going to look at it through different lenses because of the different kinds of lenders they are, but they're going to want the same basic info. And so what does that look like? So, it's all pretty much the financial info. This is, that's most of what you want to have ready to go. Most lenders are going to want to see those financials, see your personal tax returns as they're going through that pre-flight process that we talked about. So last 3 years, personal tax returns, personal financial statement. This isn't so much required because the lenders generally will have a form that you'll fill out. They may ask you some questions through the pre-flight around your credit score, how much liquidity you have, do you own a home, things like that. And if you happen to have a personal financial statement that you may have filled out for something else, you could provide that as well. But just know, ultimately, when you go through a full applications, usually at that point, they'll have a specific form, personal financial statement form that you'll be filling out. Last 3 years business tax returns, or however many tax years the business has been in existence. Certainly, though, if it's a startup or a newer business, you're going to need 2 to 3 years of projections with detailed assumptions. We're going to talk about that a little more here in just a second. And then kind of along those same lines, if you're a startup or newer business, or if the request is a large expansion, same kind of thing there. A full business plan is going to be something that the lender is going to want to look at, especially for the startup and newer. Large expansion for an established business, maybe more of an executive summary. Here's what we're expanding. Here's, whatever growth that involves, or whatever that expansion, whatever the details of that are, lender's going to want to understand that. So kind of going back just to the bullet before that, though, around the projections and the assumptions. So the assumptions are almost more important than the actual projections themselves. These are projections. We know that as a lender. The guarantee we get from SBA enables us to look to projections more. That's something that conventionally a bank just won't do. We're always looking in the rear view mirror conventionally and want to see you made enough money the last few years to pay for the debt you want today. Well, growing company, a lot of other situations, that just doesn't work. So that's another area here where the SBA provides this path. When you're looking at putting projections together, again, it is almost more important for the assumptions. How did you get to the numbers that you think you're going to get to? How did you develop what revenue you're going to generate? How do you know where'd you get the percentages for your expenses from? And all of these things that kind of go into what projections are. And so this is an area where your score mentor, they do a lot of work, especially with newer businesses, in building reasonable projections with detailed assumptions. And when I say detailed, I don't mean like assumptions that are a few bullet points of a sentence each. Detailed, demographic info, industry info, all of these kind of information, all this kind of information that can generate or lead to, okay, this is what I think I can do in revenue. And that's not an easy process to go through. And most business owners, they know their business, they know their trade, their craft. You get to the numbers side, and it's, you kind of want to shy away from that. And so it's tough. And so again, this is where your score mentor can really help you fine tune those projections and really get them dialed in, get those assumptions dialed in. I always tell a story. Before I went to SBA, I worked for a small community bank here in Portland. We did got a lot of applications for startup businesses. And there was one I always tell the story of. It was a yogurt shop. And so one of the things I would do with the business plan, when I was reviewing them, I'd look in the beginning, kind of how much, they were needing, what the business was, management, but I'd flip then right to the end, which is typically where the projections are. And I'd take a look at their projections. And so I do that for this yogurt shop, and I flip to the projections, and I'm looking at the first year cash flow over those first 12 months. And it's the same revenue, the same expenses, the same profit every single month over those 12 months. They just had an annual number and divided by 12. Well, it's a yogurt shop. We know January, February are going to look very different than July and August. And so right off the bat, they just didn't really put a lot of work and thought and info into building those projections. I didn't look at anything else. The deal, I think we got them, actually in that case, we got them to a score chapter, I think, in Portland, because that they needed to really work through those projections better. They needed to fine tune them. They needed to be more reasonable, because right off the bat, you could tell they weren't. And so that's just going to put a lender in a scenario where, if we can't be comfortable with how they build these projections, how are we going to get comfortable that they're going to be able to run the business? And so that's really what it's coming down to. One other thing with what you need to have for the lender, you need to have your dollar amount that you're asking for. You need to have your total project, what you're putting into that, and if anything, and what your loan need is. This is not small business lending. It's not like a credit card where you apply, your credit score is this, you make this much money here, it's a big matrix, and okay, boom, here you go. You get a $3,000 limit at a 12% rate, whatever it is. This is not that. This is, you need to be able to define what you need to be successful with that plan, that project, whatever you're needing money for. You need to be able to define how you're going to use it, and how it's going to generate these projections that you've also provided. And so with that, now you can absolutely have a plan B and a plan C, where you can have a scenario where you say, okay, 250 is what I want, but if I could only borrow 150, I could still make it work, but on a smaller scale. That's okay to approach it like that, to have that plan B and talk with the lender about that plan B, that, this is my ideal. And that's what you just always want to make sure you do. Start with what the ideal amount that you feel you need to be successful with that business or with that project, whatever it is you're asking money for. And then make sure, though, that if there is that reality of a plan B or C, that you do detail that out for the lender as well. So they have an understanding of, okay, well, they're flexible, so let's see what we can do here. And it just sets it off on a good foot with the lender when you have that kind of scenario going on, where it could be less money and it would still work, but just on a smaller scale. All righty. So what if I'm still told no? So you talk to a bank SBA department, they can't help. They refer you to several non-bank lenders. They all say no as well. So now what? Now what do we do? There's probably a flaw somewhere in your plan, some aspect of the request, right? So there's something that's not working, and something that's off, that both the bank, both the non-bank lender are saying, we just can't get there. in any of these scenarios, you really have to be provided a reason for that denial. And the non-bank lenders will most likely be able to discuss the hurdles in some more detail. Banks, you're a lot of times denial reasons. They're specific, but they're also a little vague within them. But in any case, whether it's a bank, whether it's a non-bank lender, you have to be given reasons why they're not able to do the loan. And so then from there, it's again working with a score mentor, addressing those reasons, figuring out ways to overcome them. That may not be something that is necessarily possible in short order, but you're going to be able to form a roadmap of sorts for how those things can be addressed. One thing I talk about often is there is a home, for every deal. I believe that. But in some situations, that home may not be available for a year or 2 years down the road. You have things that you need to work through to better improve your chances of not only finding that funding, but also being successful with it and with the business when you get it. And this is another reason why non-bank lenders are just generally better fits for new businesses. They have a lot of advising and technical assistance resources, counseling resources that also come with the loan. So you may have a score mentor, but if obtain if you're a startup and you're obtaining your loan from a non-bank lender, they're also going to have advising and counseling resources that again will come with the loan. And so this is more in the startup world, the newer businesses. And really when I say new, I'm saying 6 months or less. 2 years is still kind of that magic number where a lot of banks will still consider you a startup within those 2 years. But I'm meaning really the core kind of either the loan is launching the business or you're very, very soon after you launched and you're looking for funding. Those are really challenging deals for a bank to get comfortable with just in general. But again, getting back to, what is the best place to start? It's still that bank as long as you get to that SBA department. You get to the SBA department, now you're into that world where, okay, they're going to look at it. There are some startup loans that banks will do. Those do happen, but they're tough. They're just very tough. And so the beauty again is when you get to the SBA group, even though that might be a quick conversation with them, again, you need $100,000 and it's a startup. There's a lot of banks that are just not going to be able to do that. But so they'll quickly get to that for you. Nah, something doesn't fit. That's not going to work with us. But again, it's about fit. Doesn't mean they have a bad idea. Doesn't mean that they think they're the worst business owner in the world. It's just about fit. It's about that. Banks are federally regulated. We just got a lot of things around what we're able to do and not able to do, again, even with that guarantee. And so when you are at least with that SBA group, now again, those people are going to be knowledgeable of these other lenders that are out there that are better fits and will get you connected with them. And then, as I mentioned, restated again, your business having trouble, you're looking for money, having trouble finding it, looking in the wrong spot, or the not ready. That not ready piece is pretty common as well, where maybe the business plan needs some, the projections need some fine tuning, like the yogurt shop I talked about. Maybe they need to save a little more money to put into the project. Banks, non-bank lenders, both of them will want you to have some skin in the game. So sometimes it's a situation where you just don't have quite enough saved. 10% is kind of the bare minimum when you're talking about a startup project or a large expansion kind of project. And so maybe there needs to be some more just focusing on saving and putting money away that can go into the project. So there's a number of scenarios there where people aren't ready. And this just again gets back to when you're with that SBA group, If you're not ready, then they're gonna help you like they would if you are ready and getting you to a non-bank lender. If you're not ready, they're going to help get you to SCORE. They're going to help get you to maybe a small business development center, maybe some other way for you to get that advising resource for you to get things, fine tune your plan, fine tune other aspects of it, and then be able to be successful in finding the capital that you're looking for. So I am at the end here. I know this is being recorded, and however, I am live at the fair today. I should be in the room that this is being shown at, and so maybe while I'm talking, I might be walking up to the front of the room as this is actually playing in the room. So I would love to answer questions. I've answered them through as it's being replayed in the chat for people that are seeing this virtually. But for anybody that is live at the fair, I'll be happy to take some questions now. So I thank you so much for joining and appreciate it. Have a great rest of your day, and we will talk to you later. Thank you.